This is your LMAX exchange technical update for Thursday, December 1st, 2016. Euro dollar. So the euro continues to be pressured to the downside, as you can see with the weekly chart, and the focus now is on a retest of the 2015 multi-year base at 104.63. A break below that level would then expose a deeper drop towards parity further down. At this point, any rallies that we do see should be very well capped ahead of 109. Sterling dollar. So nothing new with cable right now. The market has been confined to a consolidation off those recent 31-year lows. And while the market holds below a previous base at 127.96, the pressure does remain on the downside, and scope exists potentially for another drop back towards those 31-year lows in the 120 area. Dollar yen. So dollar yen has continued with its impressive surge. The market is now traded up through 114, approaching next key resistance in the 114.87 area, and certainly by that psychological barrier at 115. Daily studies continue to be quite stretched, so there is risk still for a bit of a short-term corrective pullback before we see the market look to make any meaningful upside from here. Ultimately, though, if we do see setbacks below recent support in the 111.36 area, it could open the door for a move to 107.50, where setbacks should be limited in favor of a fresh higher low and fresh upside extension. Euro Swiss. So Euro Swiss has seen a bounce in recent trade, but overall, since breaking down below a range that was defined in the 108 to 110 area, the overall risk remains to the downside, and the lower top is now sought out in the 108 area ahead of a retest of the 2016 low at 106.24. Aussie dollar. So Aussie saw a bit of a rally over the past several sessions, but that was completely negated in Wednesday trade, with the market putting in an impressive reversal and the market putting in a lower top now, which looks to be in place around 75. This will be confirmed on a break back below the recent low that we saw at 73.11 and open the door for a fresh downside extension towards next key medium-term support at 71.45. Dollar CAD. So dollar CAD has been mostly consolidating recent gains. It's been trading a little bit lower, and a correction is not is completely understandable given the intensity of the uptrend that we've seen over the past several months. Overall, though, the uptrend is intact, and any setback should be viewed as corrective in favor of the next higher low, ideally in the 132 area, ahead of that next upside extension beyond the recent highs that we saw just shy of 136 and towards the 140 area. Kiwi dollar. So Kiwi gains have been very well capped, and this is to be expected after the market recently broke down below 70 barriers. At this point, look for a lower top at 71.70, which will be confirmed on a break back below recent lows in the 69.70 area, and then towards next key medium-term support at 69.52. A break below that level will expose the 65 area further down. SPX 500. The S&P 500 has broken to a fresh record high in recent trade, and the market is now considering the establishment above 2200 so that it can see fresh upside towards next key barriers at 2250 and 2300. At this point, it would take a break back below 2180 to take the immediate pressure off the top side. Gold. So gold has been under intense pressure over the past several days, and the market is now testing some major internal support in the 1180 area. We have breached that level and broken below, but it will be interesting to see how the market responds below 1180. Ultimately, the basing, longer-term basing structure is still intact here, while the market holds ideally above the 1130 area. If we do see a break back below 1130, though, it will negate the basing possibility and expose a retest of that critical multi-year base just shy of 1,000 going back to 2015.